Hello, hello, hello. My name's Dominique Lewis, and I am a realtor here in the upstate of South Carolina. Today, I am bringing you a wonderful series. I have an interview for you with all the questions you've been asking about down payment assistance, what you should do if you're wanting to buy a home and you're probably afraid to ask these questions. Well, I got you. Today, I'm doing an interview with Brooke Lynn with OnQ Financials, and she's going to answer all the questions that you have. So, well, I'll be asking them, you'll be listening. But if you have more, all of her contact information will be below, as well as mine if you need a realtor or a lender. So let's jump right in. Okay, Brooke, tell us a little bit about yourself.
Hey, so my name is Brooke Lynn Decker, and I work for OnQ Home Loans as a loan officer. Um, I have two small children, and I am very passionate about helping people purchase a home, especially first-time home buyers. I enjoy helping everyone, but my passion lies with first-time home buyers. So, and the education piece of it as well, because there's so much that goes into it.
Awesome, awesome. Question number one. What's the first thing someone should do before starting the home buying process financially?
I think, well, of course, speaking to a lender or a realtor, of course. But yeah, if you're thinking about getting into it, I would say trying to save your money. There are down payment assistance programs out there, but it's still not a bad idea to try to have a little pool of savings because you're going to have earnest money, inspection, appraisal, things like that. So even if you get down payment assistance, and you're going to have most of your stuff covered, it's still not a bad idea. I feel like to at least have about $2,000, going into it, to cover earnest money, appraisal, inspections, things like that.
Awesome.
Yeah.
Love it. Question number two. What are the current average interest rates and what factors affect the rate that someone gets?
So yeah, it depends on your loan program. There's FHA, conventional, USDA, VA. And it also, so what impacts it is the loan program, how much you're putting down, and credit score. Those are the main factors. So if someone has an excellent credit score and is doing conventional and they're putting, say, 5% down, I feel like we're seeing rates in the high sixes. For USDA, FHA, and VA, I'm seeing more maybe mid sixes. And then down payment assistance programs, it depends on which one, but I'm seeing anywhere from like 6.5 to certain ones are on upwards in the sevens. So average right now is probably about 7%.
Awesome. What credit score is typically needed to qualify for a home loan?
At least a 620 is kind of the rule of thumb. Some programs require a 640. But if you have, I would say probably 640 is the goal. Yeah.
Love it.
Yeah.
Can you explain the difference between a pre approval and a pre qualification?
Yes. So pre-qualification is where you apply, and all your stated income and assets is what we use to send that pre-qual for. So it's not as thorough. So a pre-approval is going to be more thorough. There, we're going to get your pay stubs, your bank statements, verify your income and assets. So it is a very thorough pre-approval, and it's more concrete.
Love it. How long does this whole loan approval process usually take?
So for a pre-approval process, I try to have pre-approvals out within 24 to 48 hours of receiving an application. Sometimes it can take longer if the income is a little more tricky.
Mhm.
If they're self-employed or anything like that, it can take a little bit longer. But yeah, I would say typically between 24 and 48 hours.
Okay. Next question. What down payment is typically required for first time home buyers?
Conventional allows 3%, FHA is 3.5%, VA or USDA are zero down, but you have to be a veteran for VA or USDA. You have to buy a home that is rural and eligible for USDA financing.
Are there any down payment assistance programs available in our area right now? And we are in South Carolina, specifically the Upstate, but I do serve the Upstate, and that does include Greenville and Spartanburg County.
Yes, so there are several. There is South Carolina State Housing, which is $10,000 in assistance, and that covers the entire state. There is a program specific to Greenville County, which is 10,000 up to 30,000 in assistance, depending on your there's something called AMI, which is area median income. So it has income limits, and there's 80% AMI up to 120%. And depending on where your income falls, it's either 10 or 30,000 in assistance. Spartanburg County has one that is, I believe it's 20,000. There's one for the north side of Spartanburg specifically that's 15. Um, what else? There's one Spartanburg Regional. If you work for the hospital system, you get upwards of 5,000. There's one for Prisma as well. That's 5,000 also. And there are income restrictions is the main thing on those. You can't make too much money. But yeah, I can help guide you on whether or not you qualify.
Thank you for saying that. So to reiterate, she listed all of these down payment assistance that are available for you. And she said there are restrictions, there are qualifications, and you can't just get them. So I wanted to reiterate that.
Yes.
It's kind of like when I'm doing my tours, the incentives are at the time of this video. Next question. Can buyers use gift funds or grants toward closing costs or down payments?
Yes. You can get a gift from they are particular about who can gift it, so it has to be a close family member, so like a mother, a father, a grandparent, a brother, sister. They will allow close friends, but you have to document that friendship with like Facebook posts and stuff. It feels kind of funny to do that, but you do have to show that there is an established close friendship there. Um, and as far as grants, I'm doing one right now. GCRA is the seller, and they also are the builder of these homes. And there is kind of comes over in the form of a restrictive covenant, but it's almost like a grant. It's not a loan. So yeah, you can get those as well. They're a little bit harder to find because a grant is different from all the ones I just listed, the down payment assistance programs. Those are loans. A grant is not a loan. It's not going to be paid back. So there is a difference there. The grants can be a little harder to find.
Is there a way for them to find these grants?
So that is a tough one. My first one under contract right now through GCRA and with that restrictive covenant, that is the only one that I've ever worked on. So I think it's pretty rare to find those grants.
Got you.
Yeah.
So everyone, you heard that. Pretty rare. We get these questions all the time, and I have never seen it. And she's seen one, and she's been doing this for a while.
Yeah. Is it 2019?
Oh, wow. And next question. What's the difference between FHA, USDA, VA, and conventional loans? And how does someone know which loan works best for them?
So great question. Conventional is a loan where the minimum down as a first-time home buyer is 3%. If you're not a first-time home buyer, the minimum down is 5%. That loan is going to be a more traditional conservative type loan. So they're going to want a lower debt to income ratio and a higher credit score. So that loan is going to be good for someone that's got high credit and own down payment. Usually USDA is 0% down. It's not specifically for first-time home buyers. You just have to be within income restrictions. The home has to be eligible for USDA financing. They have the strictest debt to income ratio requirements. So typically your max purchase price is going to be a little bit lower with that loan. VA is for veterans, 0 money down. FHA is 3.5% down. It's not only for first-time home buyers. It's for everyone at 3.5% down. And they allow the lowest credit scores and the highest debt to income ratio. So you can typically get a lot more done in an FHA loan. If anybody has any type of, I guess, trickiness to their file, like a lower credit, like I have one right now, 580 credit score, and she has her own down payment and everything, but I couldn't get that loan done conventional. FHA will allow it though. And what was there's another part to that.
Which one is best for them? How do they know which one is best for them?
I'll tell you. Because I look and see which one gets you the best interest rate and which one is going to be the least amount of money out of pocket and what's going to get your best monthly payment as well.
I love that. Love that. Next question. Besides the mortgage, what other monthly costs should buyers expect? Taxes, insurance, PMI, so on and so forth.
Yeah. So you have the included in your mortgage payment is going to be what's called an escrow account. An escrow account has taxes and insurance and PMI in it. So taxes and insurance are due once a year. So your escrow account, you pay that monthly. It builds up in that escrow account. Then your lender pays those bills for you when they're due once a month. And then PMI is personal mortgage insurance. That is what, so FHA charges that on the life of the loan. And it's almost like kind of their fee for doing the mortgage in a way. And it's a monthly charge you're always going to have. Conventional has PMI until you have 20% equity. So if you go into it putting 20% down, you have no PMI. If you put less than 20% down, the PMI rate varies on how much you're putting down and how high your credit score is. And then as once you close on the loan, as you make your monthly payments, once you hit 20% equity, that PMI is going to fall off.
Are taxes included in that payment?
Taxes and insurance both are going to be included in that payment. Yeah. The only time your mortgage payment would ever increase is if the county decides to increase your taxes or if insurance goes up on your bill, then your monthly mortgage payment will adjust because it's included in that monthly payment.
If they start off with FHA and they have PMI, can they eventually get out of it?
Yes, I actually recommend that to a lot of people. If you start with FHA, once you believe you have 20% equity, because equity grows pretty fast in the upstate. Once you believe you have that 20% equity, you can call and do a refinance and get rid of that PMI. You could refinance to conventional and drop that PMI.
What happens if someone wants to buy a new construction home while they start the process with you? Does the process change?
Yeah. So if somebody wants a new construction home, typically what's going to happen is that builder is going to have a relationship with a lender, and they call it their preferred lender. So sometimes they end up switching over to another lender at that point because there's sometimes an incentive that I just can't offer. Like sometimes they're offering, $5,000 to $10,000 in a seller credit if you use their lender. Sometimes I do still have a better offer than that preferred lender though, because I offer down payment assistance and a lot of those preferred lenders don't. So sometimes the benefit with using me outweighs the benefit of their preferred lender because of the down payment assistance. Sometimes it comes with a lower interest rate than that preferred lender can offer. But yeah, I can definitely do new construction deals with builders like that. It just is going to be up to the buyer on who has the best thing to offer them at that point.
Do you suggest that they shop around? Say they want a new construction. Do you suggest them coming to you and then also going to the
Yeah,
new
for
construction?
sure. Yeah. I have saved many deals from preferred lenders that can't get the loan closed because a lot of time, and this sometimes it seems, and this isn't always true, but sometimes it seems preferred lenders of these builders don't do much creative loans. So if there's anything that needs some extra work, I'm your girl. I've got several loans closed with builders. So that's another thing too. If you're with a preferred lender and they tell you they can't get the loan done, definitely get a second opinion. If you know you want a new build, I don't think it's a bad idea to go ahead and have your own lender and then see what the other lenders have to say as well, just so you have options. You never know what your best option is going to be. And I'm totally cool with giving you that option. And if you end up going with somebody that's a better fit for you, like no hard feelings, but it's good to see all your options.
I love that. What's a common mistake you see first-time homebuyers make when applying for a loan?
Probably going to have to do with credit. If somebody goes to buy a home and then, the worst one I saw, we were under contract and first time home buyer getting a brand new home. And she was just busy and forgot to make her car payment. And that 30-day late popped in. We have to repull credit because we know that's something that's going to adjust the score. And it dropped her score 100 points. And then she no longer qualified for that mortgage. So that is the main mistake is you just have to baby your credit when you go to buy a house. Make sure you're making all your payments on time. Don't max out credit cards. Don't make sure if you have anything medical going on, just make sure nothing goes to collections. That is the thing that is so hard to keep up with are those little medical. They're so sneaky. But baby the credit.
Will do. Can someone buy a house if they have student loan debt?
Oh, for sure. Yeah. So student loan debt, the main problem that I see from student loan debt is if they've gone to collections and they're currently in collections, that is a hard stop on doing a government loan. USDA, VA, and FHA are government loans. If you have a government debt in collections, they will not give you another government loan. Conventional will, but the government loans won't. So if they're in collections, you've got to get them out, which I can help you figure that out. There's like a number on this alert that we have that you can call, and you have to get them taken out of collections, put on a payment plan, and then you have to wait 6 months. So I've seen that happen several times. So they cannot be in collections. Otherwise, if they're in good standing, if they're deferred, anything like that, you can certainly buy a house with them. We do have to count a monthly payment. Even if they're deferred and the payment is 0 on the credit report, we still have to put at least 0.5% of the student loan balance as a payment. So things I suggest to people sometimes, if they're deferred and the payment is 0, you can look into an IDR. So an IDR, income-driven repayment plan on student loans, is where they're going to look at your income and adjust a payment for you based on what they believe you can afford. And most of the time, that IDR is going to be lower than that 0.5%. So that can, so an IDR can help your debt to income ratio if you have a high balance on student loans.
Okay, go ahead.
Yeah, so I've heard a lot of people, they've been told that they can't buy a home because of the student loans. And that's not always true. You can look into getting an IDR. If you have a large amount of student loan debt, we have to count a 0.5% payment against you. So if you have 100 grand in student loan debt, that's a $500 monthly payment. So that can really impact, if your income is on the lower side, that can really impact your max purchase price on a home. So what I suggest for people like that is to talk to your student loan company about an IDR. So an income driven repayment plan can make your monthly payment 9 times out of 10, it's going to be lower than that 0.5% that we're required to count.
Okay.
Yeah. So student loans does not mean you can't buy a home.
Next question. How do you help buyers who are self-employed or 1099 workers?
So self-employed buyers, to calculate your income, we have to look at the most recent 2-year tax returns and then average what your income is after all your deductions. So sometimes people, and I used to be self-employed, I did the same thing. You have a lot of write-offs because you're trying to get what you owe in taxes as low as possible. So if somebody's not able to buy a home traditionally, we can look at a bank statement loan, which is where we calculate your income based on your deposits into your bank account. The only downfall to that program is the minimum down payment is going to be higher, and because it's a non-traditional loan, so they're going to require more down. It's usually 20%. But I've also helped people who are self-employed. We've worked together for a year or so to like figure out how much less on your deductions you need to do to qualify for traditional financing. So we can get creative and figure out a way to get it done.
What advice do you have for someone who's nervous about qualifying or doesn't know where to start?
Don't be nervous. Like, it starts with a phone call. Like, I love talking to people about buying homes. And so my husband and I, when we went to buy a house, I was self-employed and he was selling cars. So he was commissioned. When we went to buy a house, we were like, hey, we can pay $1,000 in rent. We can buy a house kind of thing, you know. We went and found a new house, new construction. They hooked us up with a lender. And we found out almost immediately we were not qualified at all. We were devastated. They didn't tell us why. They didn't say what to do to get qualified. So a couple of years after that, I got an opportunity to get into this industry. And I think what has driven my passion for it is my own experience with how I almost felt like dumb in a way, you know, like I wasn't qualified and didn't know why.
Yeah.
And they didn't treat me like, I don't know, they just didn't treat me super well through it. And so my goal is to make people feel comfortable, to explain the process, to teach you what all is out there. And if you are not qualified right now, that's okay. We can get you qualified. It's like, it's never a no. It may just be a not right now. And let's figure out how to make it a yes. You know, whether it be credit work or saving up money or whatever you need to do, I'll help make that plan so you can buy a home.
I love that you said that. I had a similar experience with my very first home where they told me that I just didn't have good credit. Well, I didn't have bad credit. I just didn't have enough credit.
Right.
And I too want to make sure that everyone feels welcome and not stupid. If you don't know, you don't know. So
Right.
that is why I go the extra mile, and that's why this is important.
Yeah. There's no education in school for how to buy a house. You don't know till you
Yes, that
make
is
that
so
first
true.
step. And that first step is talking to a lender or a
A
realtor.
realtor.
Yep.
Thank you so much for watching this interview. I really hope you enjoyed it and you got all of your questions answered. Again, my name's Dominique Lewis with Finding Homes with Dom. I am a local realtor here in the upstate of South Carolina with EXP. If you would like to get in contact with Brooke about any home loans, anything at all having to do with buying a house, or myself, all of our contact information will be below. If you loved it, let me know. If you didn't, I'm sure you will either way. So until next time.